And welcome back to Bitcoin Advisors channel. My name is Chris, and I'm bringing you this cryptocurrency video right here from Westlake Village, California, where it is about 1,000 degrees outside out here in California. I don't know if you guys are aware, but every once in a while we get some really hot weather. I like the heat. I think I'm going to go for a jog after I get done with this video, but got some really exciting news. Some stuff to talk about besides Bitcoin's price action. What the market's likely to do based on the current trend. I first want to dive in really quick to some cryptocurrency news. If I can just get this up on my screen here real quick. Let's see, what did we want to talk about today? We got Bitcoin Magazine. Says the fifth largest Swiss bank to enable Bitcoin trading for over 2 million customers. Yes, it says the retail bank in Switzerland will allow their 2 million customers to buy, sell, and hold Bitcoin by 2024. Post Finance is not only a leading Swiss retail bank, but it's also a banking arm of Switzerland's post office. The bank already partners with Swissquote for cryptocurrency services, but looks to be creating an independent platform. And they said, quote, "Our clients want direct access to this market through their house bank," says Post Finance head of retail banking, Sandra Lienhardt. Says, quote, "Giving the growing institutionalization of cryptocurrencies in the last 18 months, this is the ideal time to enter the market." So just another crypto bank like Nubank out of Brazil, the other one out of Mexico. I can't wait till Bank of America starts saying, hey, guess what? You can now buy and sell crypto, blah, 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 right? And it's coming, whether you like it or not. You still won't be able to replace having a Bitcoin advisor, that's for sure. Let's see. Cointelegraph, Bitcoin risks new lows as 20K looms amid dollar-euro parity. That's an interesting article because for the first time in 20 years, the dollar and the euro are reaching parity. I'm sure everybody remembers it was about $1.23 to the euro. So when you'd go over to Europe, yes, the euro was stronger than the dollar, so it cost you a lot more. I don't know if I got that right. But if we look, let's take a look. Euro versus dollar. There it is. Yeah, I did have it right on at least the dollar figures. But let's take a look on a weekly time frame for the euro. And so that's what I was talking about. $1.24 right there in 2018. When's the last time we reached parity? When a dollar was a dollar and a euro was a dollar? Yeah, 20 years ago, back in, somewhere in 2002, whatever you want to call it, 2004. Right around that area. And so the dollar is skyrocketing. That's essentially what's going on. And as the dollar skyrockets, right, and we've been talking about the next target at $1.12. If you look at this consolidation, again, you use a fib retracement from the high to the low. This is a macro consolidation. We got $1.12 coming in there and $1.28. And that's where I'd expect the dollar to head over the next 6 to 12 months. And again, this is a macro chart of the US dollar. And, it's funny. People think the dollar is getting weaker. But in fact, going back from 1985, well, it is weaker since 1985, but just over the last, year, go back to 2008, in fact, the dollar was at 71 cents. Now we're at $1.08. It's been going up as we've been acquiring all this debt. Why? All the other countries around the world, they're acquiring a lot of debt. All right, that's it for the articles for today. More importantly, don't want that. More importantly, I want to check in on my morning outline. So, why are stocks falling today? Why is Bitcoin crashing today? You know, NASDAQ down 2%. Bearish. Bitcoin down almost 2%. Bearish. Right? Bitcoin CMEs were down 5% at one point. Oh, 6% right now. The market is going to close. It's probably already closing. Right now, the daily is closing in 17 minutes. And what would I say there? Stokes are going to cross down. Volatility is ticking down. Do we have any bearish divergence coming out here from this high? This is just a sloppy consolidation, if you ask me. And yeah, so typically you want to see bullish divergence of the 3-drive variety to give you a shot somewhere up to that green 55. And we were saying, anyways, last week, very, very likely we were going to get a little bit of a bounce, and we bounced it all the way up to 22.5. In fact, I'm expecting, well, I'll get into my analysis in a little bit here. But as far as hidden bullish divergence, that is where price is making lower lows and RSI is making, price is making higher lows and RSI is making lower lows. So going back from this point right here, if we do take out this low, I mean, there's 2 lows. There's one there and one there. So I might as well draw a little peace and prosperity box here and there. Here and there. Actually, I want to get into the news, the exciting part. Why are the markets crashing? But I'm going to just label that out because I do think we have a threat of coming down into that zone. But higher low, that's 2 drives, gets you to the 21. 3 drives gets you to the green 55, and this thing will steadily be coming down, down, down. Today I have a meeting at 2 o'clock, which is in 8 minutes. So, and the texts are coming in. All right, let's get on with this cryptocurrency video, and I'll get into some price targets in a moment here. And I really prepared for this one. I really took some time because, hey, why are the markets crashing? Why is it down? So many people are uncertain today. And it has a lot to do with the numbers that are going to come out this week. And it's going to give us a picture of why stocks are very unhappy. I'm talking about stocks like Amazon down 3% today, Meta down 4% today, Twitter down 11% today. I mean, we're getting some stocks that are actually getting hammered. Some big stocks. Tesla down 6% today. Not looking good, Mr. Tesla. And just a quick little analysis on the daily chart here. I mean, we got a nice little range here between this guy right here and this guy right here. And by the way, in our free beginner's guide to cryptocurrency, we are going to be having a tutorial on the 14th at 12 p.m. Pacific time. 12 p.m. Pacific time on the 14th. And yep, there's a beginner's guide to cryptocurrency trading that I will be hosting. So check out the link in the description below. Should be a lot of fun. But as for Mr. Tesla, what is she doing? Well, I'm actually going to bring that line down to here, and we're going to go from body to body, and that's our target to the downside if Tesla wants to break with a daily closure below 622. Next stop right there. Now, can we reverse that back to the upside? Sure we can. We just got to drag it the opposite direction, and that'll give us a target to the upside. So Tesla is a tech stock. Elon, I drive a Tesla. I love the thing. It's better than any car I've ever had. I don't know Elon personally, so I don't know what to say about him. I'm not going to say anything. All I know is he's got a pretty sweet car that I enjoy driving. On the other side of the fence, what do we got here? Okay, so why are the stocks following these numbers? They're going to come out. Stocks are very, very unhappy, in particular the NASDAQ. So let's take a look at NASDAQ down 250 today. And this is on a daily time frame. And what did we say last week? I'm not sure, but to me, this looks like a W, just very similar to Bitcoin, a W. And this trend line is coming in. I don't know. Is that trend line broken? Is it broken? Should we draw a trend line here? Well, let's see. And okay, that is a trend line. And this could be the retest. That is the retest. So I would say if we do break back below this trend line, it is not going to be good for Mr. NASDAQ. And I do believe ultimately over time, yes, we will come back down. Might not be today or tomorrow or this week or next week, but I think NASDAQ is about to get smacked on the chin. I'm going to be putting out kind of a macro video on the analysis for the stock market and for Bitcoin over the last 6 months, over the last year, 10 years, 30 years. We're going to go all the way back to 1929. We're going to look at what the NASDAQ just did and how it's going to affect the markets going forward today. I would be on the lookout for this video. It's going to be incredible, and it's really going to enlighten some people on what's going to happen in the future, whether Biden's the president, Trump's the president. I don't care who's the president. I don't care what COVID says. I don't care if you got a purple flag, a yellow flag, or a green, white, and red, and black, and blue flag. It doesn't matter, but the charts say one thing. And they don't care about anything else. The charts, the markets are, it's like a being of its own, and it does not care what your political affiliation is. It doesn't care if you're a Bitcoin maxi pad. It doesn't care if you're an Ethereum bulltard. It doesn't care if you're part of the Cardano army. It doesn't care. But the markets will allow us to pull money out. If you're a trader, you can pull money out of the markets, especially in a bear market. So let's be on the lookout for what is up to come. What is up to come? All right. So the numbers coming out. Here's the rumors. Well, I'm not going to get into that. Here's the fun. Okay. In just 2 days, we get the CPI data report. It's projected to be the worst CPI in 40 years. And again, once again, it feels like we've been saying this for many, many months now. And well, it is true. On Wednesday at 5:30 a.m., we're going to get those numbers. And last month, the CPI came in at 8.6%. And the markets are now pricing in inflation at 8.8%. And that is based on the Bloomberg consensus on a month-over-month basis. And I don't know who made Bloomberg the consensus, but apparently people trust it. I don't trust it. I don't think that's the real number. Anyways, month-over-month inflation is coming in at 1%. So what does that mean? To get the annualized rate of inflation, you got to times that by 12, right? That means year over year, inflation is coming in at 12%, which means we are still trending up by a large margin. And you might be thinking, okay, well, maybe core CPI is decelerating. That's the Fed's favorite number, right? Because it doesn't include food and energy, right? The inflation number that doesn't include food and energy, the things we need to survive. Sorry, it's coming in at 0.5% per month. Year over year, that's 6%. And that's why I'm harping on this inflation. It's going to kill the stock market. And if it kills the stock market, likely going to kill Bitcoin too, for at least temporarily. And what's happening to the dollar? The dollar is, again, skyrocketing, coming into parity with the euro. And so, again, on the 13th, we've got that CPI data coming in. Now, on the 14th, we are expecting a gain of, on the 14th, we got PPI data coming in. So back to back, Wednesday, Thursday, this week, PPI data is coming in, expecting a 0.8% month over month gain basis, month over month basis for the purchasing prices. Okay, that means a 10.6% bump this year. That's on a year over year basis. So purchasing price index is inflating at 10.6%. This is a substantial increase, and it does cause some folks to become a little nervous, okay? And then you've got the U of M Consumer Expectations Survey, and the 5-year break even is at 2.6%, relatively low. So consumers' expectations of inflation have been relatively low. And just FYI, consumers are idiots, right? I mean, they're just believing all the lies the governments are telling them. And so I think when everybody's even more shocked because inflation is higher yet again, it's going to be bad. Okay, that's it for the news for today. And for things to be coming out and why the markets are in turmoil, they're all anticipating another, yet again, higher inflation in the past 40 years. So it'll be on repeat on Wednesday. If something else turns out different, I'll be the first one to tell you at 5:30 a.m. I was up at 3:30 a.m. today getting into these markets. So next thing I want to point out on Bitcoin, in Bitcoin land, in my favorite land where all your dreams come true, where all your dreams come true. I had put out an Instagram post over the weekend, and here's what it was. Here's what it was. I put it out on my personal Instagram page, not our business one. If you care to follow me and my family, we do a lot of fun things on the weekend, like surfing and cycling and Bitcoin kind of analyses and fun little videos. I'm going to leave a link in the description below in case you want to check that out. But what I wanted to show you guys here is what I posted this weekend regarding this right here. And if you can see from my scribbles, the reason I'm using this, I'm gonna try to draw. Is it gonna let me pick the color? No. So on the 4-hour time frame, I said, look, on the 4-hour time frame, if we have a closure above or below the range 22,500 and 21,100, it would result in this. Above 22,500, we're heading up to 23 to 2,500. If we have a closure below 21.1, we'd head down to 20,500 with a short-term stop and then continuation down to 19.9. So where are we at right now? We just bounced off of this $20,500 level and very, very likely probably going to head down to that 19.9 level, if not lower, given some of this economic data. And the market is pulling back right now and about to hit my take profit. Is my take profit in? Guys, I've been experimenting with something that a friend of mine in Portugal is doing, actually. He's in Portugal. Just kidding. And anyways, we are having some fun with some levered trades. And I just want to check something really quick. I got one of them up 60% right now as we're talking. And okay, I don't want to give away my gold. Anyways, did I put my take profit in? I don't think I did. Daily P&L 133. Daily. I guess I'll check it after the video. Back on to my little trusty slideshow. Just kidding. We're going to go right back to this chart right here. And I think we got some more downside to come. And yeah, that was my take profit, and it did not, I didn't have it in. So should I just get out? Yeah, I should. I'm going to get out like Spout on this trade. Unless, let's take a look at the lower term time frame, see if there's any more legs on this move. And that's part, actually, the plan is, right, you just got to take profit where your take profit is. If you don't, you might just get smoked. So that's what I'm going to do. Limit. Boom. Okay. Confirm. Let's see if it goes. Can I get a little break here? Boom. I mean, honestly, I don't see any real reason. Yeah, except for we're at the bottom side of the range, and there will be some drives with bullish divergence. So I really do want this to get out. Oh, there it goes. Did it go out? Partially filled. And see, look. Oh, there it goes. So, anyways, trying some new things on a new exchange. And that's weird. All right. Sorry, guys. Back on. And what I was explaining, again, based off of my little chart here, was the range. The range. And I probably should have waited a little bit longer, but anyways. Back into it here. On the 4-hour time frame. What did I say? What did I say? Let me get my little thing back up here. And Chris Mitchell, screenshot. Let's see if this lines up. So 22.5 and 21.1. 22.5 and 21.1. So I'm going to move this over here. And I'm going to put the lock on. Let's see if it'll just lock. And then I'm going to go here, 22.500. 22. Oh yeah, this was the range. 22.5. That wick there, and this wick there. And I said, hey, look, if we break this on a 4-hour, coming down to 20,500 with a short-term bounce. We did get that bounce. Could have bounced a little more, yes, but the way NASDAQ's pulling back right now, I don't think it has much more of a bounce left in it. So that was the bounce right here to the 9 exponential, as long as the 9 is governing. And we are closing below this last high, coming in at 20,690. I'm expecting the next target down at 19,900 to get hit, which is this last low right here. If that breaks, well, then it's see a sayonara for a shot back to the bottom side of the range. Actually, let's just take a look here. Would I consider that the low? No. Oh, got to take off the pencil thing. Erase. 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 Okay, let's drag this over here. So the fibs are pretty accurate here. And are we going to get a bounce here first or not? Hidden bullish divergence. We got to confirm a local low. This is not confirmed as a low yet. So, do we got some more downside? Like I said, over the weekend, target was 19.9. If we want to kind of use this little consolidation. And keep in mind, you know, as long as that CPI data has been coming out, right? Things have been awful for stocks. So if we get a 4-hour closure below here at, you know, ultimately I think we are coming down to this 19.9 region. If that wants to break, next stop is going to be 19.5. I do believe if 19.5 breaks, then the next target is going to be much lower, coming in at 17.6. And that's back to the bottom side of the range. So here's how I'm going to change this up since we did get a resolution of that range over the weekend. 19.5 below there. That'll give us a target down to here. And I'm just going to, and we probably get a small bounce here at this point. Probably get a bounce here too. You know, it's not going to get shafted all down at one time in 1 second. However, I would expect some bounces along the way. And ultimately, again, if this area breaks at 19.5, I'm looking for a move down to the range lows here, somewhere between 18 and 17.6. Okay, and what's on the bullish side? what would save the bulls? As long as we could close back above the 618 right now. Let's see. So we are still holding the 618 here, coming in at, that's at 20,168. Could we just put in another higher low right here at the 0.5? And that would be the bullish case. But as momentum will cross to the downside today in 2 hours and 47 minutes, with momentum crossing to the downside, and that would be 2 drives of bearish divergence. Again, prices making 2 lower highs, and where are those lower lows? There's the last low. These. So we got 1. Technically, that's what we want to see. If we want to be bullish, and we need to hold some kind of a higher low here and create some hidden bullish divergence, which would give us just a drive probably back up to the top side of the range. So is this going to be a sideways crab market? Depends on that inflation number coming in on Wednesday. And what NASDAQ does. Where's those targets for the NASDAQ? Very similar chart here. Volatility is going down, momentum's to the upside, and we do have, coming back from this point, several drives of hidden bearish divergence, and prices making lower highs, and RSI is making higher highs. So that confirmation anywhere here or lower, which we did just close, I'm looking for a move back to the bottom side of the range, which in turn from this point, yeah, no, it's got some ways to go down. So forget about this trend line for just a second. Pretty easy way to manage risk, though, if you want to buy the trend line and then put a stop loss somewhere behind that wick. Because if we come back down into this triangle, it's going to be down, 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 and for Doggy Town. All right, it's been about a half an hour. Hope that video was helpful. I'll come out with another one tomorrow. Again, we're going to come out with a macro video on the Bitcoin price cycle alongside NASDAQ and what it means for prices going forward. I hope you guys have a wonderful, blessed, highly favored day. And don't forget, if you want to put Bitcoin or other cryptos in your IRA, we have a simple, safe solution to do that. 100% insured by Lloyd's of London. We use a custodian. We have all kinds of agreements in place so that you don't have to worry. And the best part is you get customer service. You know, if you have questions about how to trade or what's in my IRA or how to put crypto in your IRA, well, you can pick up the phone and call somebody. And we look forward to helping you learn how to trade these markets. And again, don't forget the class coming out on the 14th at 12 p.m. Thanks, and have yourself a blessed day.